Today, we stand on the brink of the largest crisis in the American automotive industry in recent decades. This is not merely a slowdown in growth, not a normal market correction. It is a full-scale catastrophe that could collapse production, send car prices soaring, and cost thousands of jobs across the country. And the cause of this is a new, unexpected blow from China in the ongoing trade war. A blow whose consequences could run far deeper than many realize. China has imposed a ban on key American automotive goods. The world's largest car market is closing its doors to American manufacturers. This is not just a temporary measure or a retaliatory tariff. It is a strategic shift that could permanently block U.S. companies' access to the Chinese market and accelerate the rise of Chinese giants such as BYD and NIO. This decision is already having a colossal impact on the entire global market and is reshaping the balance of power. Before the start of the trade war in 2018, American automakers sold more than 275,000 vehicles annually in China. But after the first wave of Chinese tariffs, sales collapsed by nearly 50%. Today, after Beijing's latest move, American companies risk being completely pushed out of the most important global market. Regaining that position could take decades, if it is possible at all. Let's take a closer look at the consequences. For many years, American companies set the tone in the automotive industry. Ford, GM, Chrysler. These names were symbols of global automotive power. Their vehicles conquered roads not only in the United States, but also in Europe, Asia, and South America. However, China, methodically building its own industrial empire, gradually seized the initiative. Already by 2023, China surpassed Japan to become the world's largest exporter of cars, and BYD overtook Tesla in electric vehicle sales. The United States has found itself in a catch-up position. China's market accounts for more than 30% of all global vehicle sales. And now, after the strengthening of trade barriers, the share of American companies in this market is rapidly shrinking. GM's sales in China have been declining every year since 2018. Ford is losing ground. Tesla is facing new regulatory hurdles that prevent the company from implementing its ambitious plans in the Asian market. Meanwhile, Chinese brands are confidently expanding their influence in Europe, Latin America, and even within the United States itself. Their cars are cheaper, more technologically advanced, and increasingly perceived as worthy alternatives to traditional brands. An escalating intrigue is unfolding. Did the United States make a fatal mistake by initiating this trade war? The original goal was noble: to bring manufacturing back home, reduce dependence on China, and protect American jobs. But reality turned out differently. Instead of weakening China, American policies have only accelerated its growth, particularly in the segments of electric vehicles and batteries. Instead of bringing jobs back, the tariffs increased production costs and exacerbated the shortage of critical components. Now the blows are being felt by everyone. Tariffs on steel and aluminum have led to a rise in raw material prices by almost 25%. Automakers are forced either to pass these costs on to consumers or to cut their profits, delaying investments in new models and technologies. As a result, the average cost of a new car in the United States has jumped to $48,000 and continues to rise. The threshold of car affordability for the middle class is rapidly slipping away. Moreover, the used car market is also overheating. Due to the decline in new vehicle production, demand for used cars has increased, pushing prices even higher. For millions of Americans, the dream of owning a car is becoming unattainable. A new economic strain is forming, striking at the very foundation of American society. The problems are only accumulating. Leading American automakers are cutting investments in new factories. Ford and GM have already begun revising their plans to expand production capacities in the United States. Stellantis has warned of potential plant closures if trade restrictions continue to intensify. Behind every closed factory are thousands of jobs at steel mills, auto parts manufacturers, and logistics companies. Meanwhile, Chinese auto giants are developing full production chains. Companies like BYD and NIO are not just building cars. They control the entire process, from raw material extraction to final assembly. This allows them to rapidly lower production costs and offer cars at prices that American companies cannot match. BYD has already surpassed Tesla in global electric vehicle sales. Today, they produce electric cars starting at $11,000, whereas American counterparts are several times more expensive. This not only threatens the U.S. share of the overseas market, but also begins to undermine their position in the domestic market. The reason for such success is China's dominance in battery production. More than 70% of the world's lithium-ion battery production is concentrated in China. The United States is only beginning to develop its own production, despite large-scale government incentive programs like the Inflation Reduction Act. Even under the most optimistic scenarios, catching up with China in this area will not be possible for at least another 10 years. And while the United States is taking its first steps, China is solidifying its position, building new factories, signing contracts for lithium supplies, and securing access to other rare earth metals. If Beijing decides to take harsh measures, for example, restricting the export of rare earth elements, American industry will face colossal costs and supply disruptions which could completely reshape the electric vehicle market. Alternative suppliers exist, but their capacities are limited, and establishing new production facilities requires time and gigantic investments. This means that prices for electric vehicles in the United States will soar even higher, ultimately closing the path to a mass transition to green transport. Meanwhile, Chinese companies continue their aggressive expansion. Their inexpensive electric vehicles are conquering Latin America, Southeast Asia, and are beginning to penetrate Europe. In the coming years, this pressure will only intensify, and if the United States does not take emergency measures, American brands could be left in a catch-up position across all key global markets. Right now, the question is being decided. Will America maintain its position in the global automotive industry, or will it permanently lose it to new players? Washington can strengthen support for domestic industry through subsidies, tax incentives, investments in lithium mining, and battery production, but there is less and less time remaining. Meanwhile, China is acting quickly and decisively. And if the trade war continues to escalate, Beijing is ready to deploy its full arsenal of economic tools: new tariffs, supply restrictions, large-scale price cuts for its vehicles in global markets. Each such measure will increase pressure on American companies and consumers. Today, not only the automotive sector is at stake. Entire industries are under threat: metallurgy, electronics, logistics. Supply chains are breaking, prices are rising, and jobs are disappearing. If the United States loses its influence in the automotive industry, it could become the first step toward weakening America's position in the global economy as a whole. The fight for the future of transportation is a fight for technological leadership, for jobs, for national security. And every step Washington takes in this conflict will have far-reaching consequences. Today, Chinese auto giants are confidently capturing markets, and American manufacturers are forced to fight not only for market share, but for their very survival. Will America's response be strong enough? Or are we witnessing a historic turning point where automotive leadership permanently shifts to Asia? Share your thoughts in the comments. Will America manage to defend its positions, or are we already witnessing the decline of the American auto industry era?